I recently ran a poll on my YouTube channel asking my audience what types of commercial real estate they're looking at buying this year, and 44% said multifamily. I just have one question. Why? I cannot comprehend this, so I'm going to break down why I think multifamily is a terrible investment today. And look, maybe I'm wrong. Let me know in the comments if you feel that way, and I'm open to changing my mind, but I just don't see how the juice is worth the squeeze when it comes to buying apartments in today's environment. Now, before we get into what's going on today, let's take a step back and look at the history of investing in apartments since 2012. Under the Obama administration, the 506B syndication was added, where deal sponsors could raise capital from friends and family that were not accredited investors. That is why apartment syndication has absolutely exploded over the last decade. It has been an incredibly well-performing asset class since then. If people started buying apartment complexes in 2012, typically on 3 to 5 year timelines, they fixed them up, flipped them to the next guy who fixed them up, left a little bit more meat on the bone, and flipped them to the next guy. We're now in the third or fourth recycling of these units, and there's no value add left to do. Most of the product that investors are focused on is from the 1980s, 90s, and early 2000s, which, yes, needs a little bit of updating. But once everything has been updated and rents have been squeezed as high as they possibly can be, there's nowhere else to take these deals. There's not really a value add component remaining in the multifamily realm. Somebody's gonna jump in the comments and let me know, oh, well, I found a 50-unit value add apartment complex in the middle of nowhere. And yes, there are still going to be deals out there that have some sort of value add component where you could raise capital and make it make sense. But there is an insane amount of competition out there looking at multifamily deals. There's not very many of them remaining, and the returns are unbelievably low. Multifamily cap rates are probably at the lowest that they've ever been, if not close, and interest rates are pretty high. You combine that with the fact that there's not really any way for you to invest money into these buildings to really fix them up and justify another $100 a month in rent, and you can't really add too much to your NOI. Now, I don't know about you, but I am not buying low cash flowing assets to just sit there and hold them and hope that they perform well. My commercial real estate investment strategy and most of my audiences is by taking a value add approach, meaning you are adding something to the property that justifies an increase in your net operating income. If you can't do that in multifamily, you're not gonna get any value. Now look, I understand why multifamily is such an attractive investment asset. One, it's been the poster child for every single podcast and multifamily guru for the last 10 years. It seems like there's always another conference or another course that you can buy on how to become a multifamily investor. And let's be honest, it's also the easiest asset class for most people to understand, because most of us grew up with a roof over our heads and know how residential real estate works. But just because it's easy doesn't mean that it's going to be a good deal for you. In fact, that means there will be higher competition. You're going to be competing against other investors that have a lower cost of capital that are willing to take lower returns just because they need to put the cash to play. I mean, let's talk about the investment returns right now. All of my friends that are in multifamily tell me that if you can get an 8% annualized cash on cash return and a 12% IRR for your investors, you're hitting a home run today. That's basically less than the stock market. Why would you take the risk of buying an apartment complex and do all of the work involved just for 8%? I mean, I wouldn't even get out of bed for that. Whereas if you look on the commercial real estate side, we won't do a deal unless it has a minimum of 18% annualized cash on cash return with an 18 to 22% IRR. That means in 5 years, we're doubling our money and moving on to the next project. Now you might be thinking, oh, well, the market's not in a great place and things are a little iffy. And that's true, but that means it's a great time to be buying. There are people that are looking to get out of the commercial real estate industry and sell their assets at what I consider an on sale price. In fact, we did a video with Hamza Ali here recently where we broke down the numbers of buying and building new flex space today in today's environment and how to double your money with that despite how high interest rates are, despite how high construction costs are in 3 years. I would much rather go out there and find my blue ocean where none of the sharks are swimming, where I can do whatever I want and make really good returns than to continue fighting in the multifamily world. Now you might be saying, well, Tyler, I don't know anything about commercial real estate. Multifamily is so familiar to me. The thing that I would say to that is you didn't know about multifamily investing at some point. You had to sit down, read the books, meet with multifamily investors, and learn from them. You can do the same thing in commercial real estate. It is, in my opinion, easier. If you know how to look at a rent roll for an apartment complex that has 150 units in it, looking at a 30-tenant triple net commercial real estate deal is going to be so much easier. Plus, these leases go for 3 to 5 to 10 years. I don't have to worry about it. I can justify having a property manager, and I don't have to do anything else on a day-to-day basis. So if you want to learn more about how to invest in commercial real estate and start that journey, watch this video here.